And welcome, I'm Srishti Sharma and you have tuned into the special edition of the Q2 FY24 GDP, and in the quarter gone by, that is Q2, the GDP of India has not just managed to surpass the analyst expectation but has also surpassed what the RBI has been guiding for. It's the second consecutive quarter that we are seeing India's GDP above that 7-odd level. Other than that, RBI has been expecting the Q2 FY24 GDP at 6.5%, but the GDP has come in way above those levels. What I can see is that July-September GDP growth rises by 7.6%, a slight moderation than what we have registered in Q1 of FY24, that was at 7.8. But regardless of that, the analyst expectation was close to 7%. So a surpass on all the parameters is what we have seen, and also on a YOY basis from 6.2%, we have now managed to climb to that 7.6%. What does it mean for the India growth story going ahead? How are the analysts reading at to this particular number, and what are the likely triggers for the India GDP growth ahead? Let's try to decode all of that, and with this, let me welcome on board two of our very special guests. We are being joined by Govinda Rao, Chief Economic Advisor at Brickwork Ratings, as well as Suvodeep Rakshit, Senior Economist at Kotak Institutional Equities. Thank you so much, gentlemen, for giving us all your time. Firstly, I would like to come to you, Suvodeep. This 7.6% number, how are you reading it? Because we were gathering that 7% was the street consensus. What is that you are looking at when it comes to this particular number? And also, what is the growth outlook ahead then?
So if you look at the numbers, and obviously away from the headline of 7.6%, if you look at, let's say, the from a production perspective, if you look at the services and the industrial sector, etc., you'll see that the agricultural sector is weak, which was quite expected. The services sector is kind of as expected in the mid single digit kind of growth. Industrial sector is actually what is pushing the growth forward, ahead of market expectations, ahead of analyst expectations. And if you look at manufacturing and construction, both of which has different drivers, but if you look at manufacturing and construction, that has been the primary driver of at least, the better than expected growth numbers. If you look at the manufacturing, I think, one of the ways to look at it is that if you look at corporate earnings, profitability has been extremely robust, and that is what is reflected in the manufacturing sector growth number. And if you look at construction, that is a reflection of the pace of government capex that we've seen in the past few quarters, and definitely in the last quarter too. And that, I think, is what sets the pace for the second quarter at 7.6%.
Okay, thank you so much for helping us understand the dynamics which has led to this particular number. But would like to come to you, Mr. Govinda Rao. What are your initial first cuts on the 7.6 number? What's your reading in this?
Well, I entirely agree with the other panelists. In addition to that, I would like to say that if you look at Q2 of 23, manufacturing was negative 3.6%, and construction was as low as 5.8%. So in addition to what has been said, I think the base effect also matters. So, well, 7.6% is a very impressive number, exceeded all the expectations. The market expected anything close to 7%, and 7.6% is very, very impressive, which is almost close to the Q2 23, Q1 2024 numbers, which are 7.9, sort of 8%. So I think the economy has performed well. There is a bit of an impact of the base year effect. Farm sector growth has not been as expected. It's not very good. But then as we go further, I think, the only, capital expenditure, the government is likely to slow down, partly because sort of public administration and defense is not going to increase as much as one would expect, because in the budget, the union government has actually budgeted a negative growth as far as non-interest revenue expenditures. So in the third quarter, I think the impact of monsoon will be felt more, but at the same time, there has been a much greater economic activity in both manufacturing and service sectors. Overall, I would think that 6.5% growth with the RBI estimates for the whole year, will possibly be exceeded. This is my impression.
So much, Mr. Govinda Rao, for giving us your views on the GDP number, but hands down to looking at that number on your screen, because that has not just surpassed the RBI expectation above that 7% mark, and 7.6 is the number that you're looking at. With this, let me welcome on board our third special guest, which is Mr. Nikhil Gupta, Chief Economist at Motilal Oswal. Very good evening, Nikhil. What are your first takes on this particular number? And also, I wanted to understand from you, because for the last 2 quarters, we are seeing that the number is definitely surpassing the analyst and the street expectations as well. So going forward in Q3 as well as in Q4, do you believe that this number is likely to sustain, or as RBI expects that there could be a mild moderation in the second half, you will be baking in those estimates as well?
Hi, thank you, Srishti. So definitely 7.6%. Nobody was expecting a 7.5% kind of growth. I think the best estimate, the best forecast was 7% for this quarter. When we look at the details, I have not seen all the details, but broadly what it looks like, vis-a-vis our expectation, we were at close to 6.6%. So we were already at on the lower side vis-a-vis consensus, and this number is much better than our expectations. But when we look at the details, I see that agriculture sector has grown only 1.2%, which is definitely a dampener. We all have looked at high frequency data, and it is not a surprise. We all knew that rural sector, especially the agricultural farm sector, has been the weak point. But what has surprised on the positive side much more than the weakness in the agriculture sector has been the manufacturing sector. Services sector overall actually has been weaker than our expectations, slightly weaker. The biggest surprise has been the manufacturing and the construction sector. I think what has played in the manufacturing sector is the very low or negative WPI. At the same time, we are witnessing very high growth in nominal GVA of the corporate sector, as Suvodeep referred to at the beginning. So that is what has played out, I think, in much better than anyone was expecting. That is what has led to this 7.6% growth in Q2. As far as second half is concerned, Srishti, we still do not believe that this growth of 7.7% in the first half will be maintained. First half has been much better than anybody anticipated. But second half, we still believe it could be closer to 5.2%, 5 to 5.5% is where our expectation for the second half is. But considering the demand scenario in the country, we would not be surprised if there is some upside to our forecast in the second half as well. Overall, it is very likely, it is almost a certainty that we will be crossing 6.5% for the year. So we will be revising our numbers upwards based on this Q2 number that is released today.
Okay, so just to sum it up for all our viewers, definitely there is an uptick when it comes to the GDP numbers surpassing the analyst expectation. The agri has not done well, but that was the street was already expecting. The manufacturing sector has been the bright spot, and the stability is a bit of a question still. But Suvodeep, what's your sense that, because RBI broadly sends that 5.7 and 6 could be the likely range for Q3 as well as Q4, and given the likely triggers in the second half, main big trigger could be the spending due to the
small beat in some sense that we have seen from our expectations, and hence naturally the full year numbers will be revised up. We were at around 6.2% for the full year. It will have to be revised. I'm just guessing somewhere around the 6.5, if not higher. The point is that in second half, obviously the base catches up. Some of the benefits that we've seen from raw material prices those start to wear off. So in terms of profitability, we might not be seeing as robust numbers that we've seen in the first half. And that will affect, in some sense, some of these manufacturing numbers and all. Secondly, when you look at construction or when you look at investment cycle, the government will, in some sense, has been front-loading a lot of the capex, and hence the second half might not be as high growth as we've seen in the first half. So overall, as you look at the domestic economy, the domestic economy will be slightly slower than what we've seen in the first half. Along with that, if any kind of global pressure starts to manifest in, let's say, the first quarter of CY24, that could have some impact again. So overall, I think the second half will be weaker. But overall, when you look at the full year numbers, those will possibly be around 6.5 or exceed the 6.5 to some extent.
So the full year growth exceeding that 6.5%, no doubts over there. And there could be some mild changes as well. But Mr. Govinda Rao, coming to you, because you have been tracking this whole cycle of the GDP panning out during the elections, and what the street is expecting, that there could be some possible slowdown in the momentum of the government capex as we approach the parliamentary elections. So what's your sense that given the three sectors which will be the most critical to watch out for, keeping that in view?
Well, the second half of the year certainly is going to be, there will be certain deceleration from the present. Obviously you can't expect it to grow at 7.5%. Reserve Bank itself has said that the third quarter GDP growth will be 6% and the fourth quarter 5.7%. I would think that it will be slightly higher than that, but nevertheless, there will be, certainly this growth momentum will not be maintained, partly because, as I said, as was already mentioned, the government cannot, keep up the capital expenditure momentum. So on the demand side, there will be problems. The increase in the risk weight, by the Reserve Bank of India to the banking and non-bank financing system will also, put certain amount of brakes on the consumer, sort of household consumer expenditure, because borrowing cost is likely to go up. Agriculture will continue to be, will be a problem. I won't be surprised if in the third quarter you have a virtually negative growth of agricultural sector, because that's the time when the Kharif harvest comes in. And then, of course, on the government expenditure side, public expenditure, as I said, the current expenditure is likely to be substantially, they can't really maintain that. Obviously, they will have to cut down. But at the same time, there is elections, elections in the 5 states, that part is over. But then the general elections will come possibly after April. So there may not be many, anything. So on the whole, I think, my own estimate is that for the whole year, the growth will be somewhere between 6.5 to 7%. And, or maybe something like 6.7, 6.8%. And certainly there will be deceleration, as I mentioned. But one has to wait and see what happens as we go along, because, festival demand has been quite high. At the same time, today there is also core sector growth, which shows that the first half of the year, the core sector growth has been very impressive.
Okay, so those are the likely triggers for the respective sectors. But Nikhil, one such concern for the economy, not just for the Indian economy, but for the world over, has been the inflation. So going ahead, how are you baking in the estimates of the inflation? Is that likely to inch up or expected to remain at these levels itself?
So Srishti, for November and December, headline inflation is expected to be higher than what we have seen in the last few months, so primarily because of higher food inflation. What is actually a little surprising is the fact that despite such a strong demand scenario, core inflation has come off month after month in the past 9 months. And The general consensus is that core inflation will remain stable. It will not rise significantly in the coming months. Probably the consensus now we're around 4.5 to 4.7% for the next 12 months or so, which is a little surprising because if demand quarter after quarter, real GDP growth has been surprising on the upside, it's very difficult to match it with the weakening core inflation prices, core inflation trends, which is actually the case. But all said and done, we believe that headline inflation will be slightly higher because of onion prices and a lot of vegetable prices in November, December, which means the current quarter, 3Q of FY24. In CY24, we believe headline inflation will be back by 5.5% range. We still do not see it at close to 4% in the next 12 months or so, until unless there is a serious global slowdown, which impacts the India's growth as well and thus inflation. That is not the base case as of now. So inflation is expected, headline inflation is expected to remain above 4%, but definitely not close to 6% as well. Somewhere around 5 to 5.5% is where we see inflation over the next few quarters.
Okay, thank you so much, Nikhil, for sharing your take, as well as Suvodeep and Mr. Govinda Rao for joining us on this special coverage of Q2 FY24 India GDP. What are you baking into the numbers and what is the growth outlook ahead? Pleasure having you, gentlemen.
Thank you.